Goldman Sachs is amongst the most positive on what kind of effect a vaccine actually does for the world economy. Are we finally going to see inflation when 50% of the population are vaccinated?
Morning, Francine. So I think, yes, we are very positive on a vaccine-led recovery in the global economy. I think that despite the rally in markets that we've already had, you mentioned it, it's been a November to remember for global markets. Your global, lots of economies in the world are still, substantially below the levels that they were at pre-pandemic, with the exception of China. So we do expect a very strong bounce back in the global recovery. And along with that, you will see some price pressures come in, especially, I think, around the turn of the first quarter going into the second quarter, because you also have some very strong base effects at that point and some commodity price increases that we expect. But on the whole, volatility, and some upward pressure, yes, we don't really expect to see the kind of output gap tightness driven core inflation that would really worry central banks in a big way to come through in 2021. 2021 might just be too early for that. I think one sort of wrinkle to that argument, however, is we still have to see what happens in the Senate runoff elections in Georgia in the early part of January. If, on the off chance, the Democrats manage to win both of those, it's not what the prediction markets are expecting, and they do control the Senate, then the chances of a much bigger fiscal stimulus than what the market and what we are factoring in, I think, comes back onto the table. And then you can start to see potentially the contours of a more longer-lasting increase in inflation out there as well. But for now, I think volatility, yes, some inflation scares through the year, but we're not expecting really the kind of inflation that would worry and prompt central banks into tightening actions.
So, Kamakshya, let's say that there is not this huge stimulus package from the U.S. that could actually spur, the whites of the eyes of inflation. But how deep can the recovery be, and how broad would this recovery be? Just on, the current stimulus we have now, maybe a bit of extra stimulus in the U.S., central bank policy staying as it is, but the vaccine coming in place into beginning 2021.
I think the vaccine and its efficacy, a safe and effective vaccine, is several times, I think, more important at the current juncture than the stimulus itself. I think that, large parts of the economy, even in parts of the world where you have already seen recovery, and manufacturing, construction are some of those sectors where you have seen it, you still have substantial spare capacity output gaps in sectors that require a lot of face-to-face interaction. And I think that that's the kind of area where you could see a very rapid bounce back if a safe and effective vaccine starts to be rolled out, people get confidence, and these even smaller scale lockdowns can be wound down. So I'd say we are very confident that you can see a pretty deep and a pretty broad recovery rippling out across the world as the vaccine gets rolled out, and rippling out across the sectors that have been left behind on account of the coronavirus, especially things like transportation, leisure, a lot of the service sectors that require face-to-face interaction. So I'd be pretty bullish on that outcome from a vaccine standpoint.
What does it mean for dollar?
Look, I think it's a fairly typical recipe for a dollar downtrend to extend. I mean, the dollar started out this episode, pretty overvalued. It got to about 20% overvalued at the peak of the coronavirus drawdown in March, April. It's now about 10% overvalued on our metrics. The Fed has cut rates, quite substantially. If you take our forecast, literally, we expect 5-year real rates in the U.S. to head down to something closer to -2%. So still further downside there as inflation picks up, but the Fed doesn't validate that. But most importantly, we expect this deep and broad global recovery that I was just speaking about. And typically, when you see that type of global growth pick up, you tend to see, a lot of the flows that have gone into safe haven assets, and the dollar is at some level of safe haven, tend to reverse and go back into riskier places like the more commodity-driven currencies, emerging markets more broadly. And so, we do expect on the back of all of that, the dollar to weaken by about, roughly 5 to 6% on a broad trade-weighted basis in the coming year.